As we continue our observations on what's going on in our grain trade today, I want to welcome in Brian Hoops. He's the president of Midwest Market Solutions in Springfield, Missouri. Lots of action dominated today by the soybean trade. Brian, did you see that one coming? It just kind of showed up all of a sudden this morning in the overnight trade.
Yeah, the last couple trading sessions have been dominated by the November crop gaining against the old crop contracts. Today, it's the opposite of that, where these old crop contracts, March, May, July, really outgaining against the new crop November. And part of that has to do with what's going on in South America. Market is seeing these forecasts for rain and harvest delays continuing in northern Brazil, dryness in southern Brazil and all of Argentina. That makes the market want to anticipate that export business is going to flow back to the United States, and that means prices are going to try and move higher to ration that demand. So we're seeing really strong gains here, kind of a breakout of sorts on the charts for the old crop contracts, new crop hitting contract highs once again, and just overall friendly technicals matching up with very friendly fundamental picture here that's driving prices much higher.
So soybeans have eased back a little bit in the last, I'd say 10 minutes of trade or so. Let's take a look at where we now stand. They're still sharply higher, don't get me wrong. On the soybean board with our quotes provided by bar chart, March is still 34 cents higher. Now 34 and a quarter higher at 14.18 per bushel. Now we did have a high of 14.25 earlier today. So we've kind of eased back off of that by about 7 cents. At one point there, we would have been a little over 40 cents higher, believe it or not. So right now on the March corn, we're 5 and a quarter higher. We're at 5.56 and a quarter. Couple of things here, Brian. Is the soybean move lifting the corn market? And also we have first notice day coming up on Friday for the March contracts. Is that coming into play this week at all?
Well, yeah, a couple things that you're asking about here, helping the corn market out. It is getting a boost from higher soybeans, no doubt about it, but also the fact that this forecast is not real beneficial for the corn crop that's growing in Argentina either. It's in its reproductive stage. It needs some rain showers, and it looks like the next 2 weeks are going to be mostly hot and dry conditions. So that part looks friendly. First notice date typically gives us a rally post deliveries. So a lot of times we see a little weakness of the day or two right in front of the day, and then after deliveries are posted, that's when we start to see our strength. But right now the weather looks to be trumping anything out there. The lack of private export sale announcements. It's been 2 weeks for soybeans. The market's anticipating we're going to see some soybean sales down the road.
Now, what about the fact that we have the weakness in the wheat market today? Why is that? We have March Chicago wheat currently down 1 3/4. We're at 6.62 and a quarter. The Kansas City market, where there has been so much talk about potential for winter kill, now we have March KC wheat down 2 3/4 cents today at 6.41 3/4. Although it has come off of its earlier low by about 7 cents now. The spring wheat trade in Minneapolis is a little bit weaker. March down 3/4 cent at 6.37. Is this just kind of a self-absorbed correction within the wheat market by itself?
Yeah, the wheat market's been choppy. One day real strong gains. Next day we'll give back some of those gains. So it's been a real two-sided type affair. Dollar is higher today, and some of the crop states reported ratings actually improve in a couple states, dropped in a few other states, such as Kansas, Oklahoma. Those ratings were down a little bit from a month ago, but maybe not as much as what the trade had expected. But the fact that the dollar's been stronger has steadily kept pressure on the wheat market today, despite higher corn and soybean values.
Okay, we'll return in a minute and we'll take a look at our livestock trade and see what's going on there. We're talking with Brian Hoops. We'll be right back. We're talking with Brian Hoops. He's with Midwest Market Solutions. Now, we're going to talk about livestock trade. Any word as far as cash cattle trade? Have we established any bids or asks or anything like that?
Yeah, we haven't heard any bid ask so far yet this week. The only numbers we have are show lists, which are about 17,000 heads smaller than a week ago. So cash is expected to be steady to higher this week. Last week the market was disappointed. We were expecting steady to higher with all the cold temperatures and the snow that was moving in through the Midwest, and that didn't happen. We just had a steady type market. So we did see, some weakness on a weekly basis, and that's spilled over to early dealings this week, along with the cattle on feed report. But as we get past these numbers, we start looking at cash trade, higher cutout values. Probably going to see at least steady, if not better, cash trade by the end of the week.
Okay, I thought we had heard so much talk last week about the fact that, especially with the winter weather, that the cattle were backing up in the feedlots.
Yeah, if that is the case, if there is cattle that have been backed up, we probably won't see much in the way of a surge in the cash markets. But the show list numbers indicate that that's not the case. It indicates tighter supplies this week, at least, in going into early part of March, and that we should have higher cash trade.
Are you bullish on cattle heading into the spring then on the futures?
Yeah, you look at those futures, they've already dialed in a lot of bullishness into the summer months based off of smaller placements. So we got a little bit of a bearish surprise on Friday, but overall, it looks like numbers are going to tighten up quite a bit into the second and the third quarters of this year. And so I think you have to be pretty optimistic or pretty bullish. And that's what the market is giving you, that incentive right now to be optimistic that prices are going to get very strong into, August, October timeframe.
For the moment, they're quite a bit weaker, though. We have the April live cattle currently down $1.77 and now 175 lower. Last trade is 121.30 per hundredweight, and that is about $1.65 off of our earlier high this morning. The October contract that you were just talking about is almost $1 lower, down 97 cents right now. Now, if we look at the feeder cattle trade, that has been trading a little bit separately from live cattle lately, but right now, April feeder is down 95 cents. We're at 142.32. All the deferreds from there on out are over $1 weaker. On the lean hog trade today, we have had some strength, mainly on the nearby contracts. April lean hogs currently up $1.12. We're trading at 86.25 right now. That's within about 60 cents of our high of the day right now, off our earlier low by about 80 cents. Thanks, Brian, for the information. Good stuff. Brian Hoops of Midwest Market Solutions with us this morning. Tammy?